Hey traders, it's Greg from Trade90X. Today is the 2nd of March, Saturday, the weekend. Hope everyone had a profitable week. Hope we made that money. Now, if you didn't make that money, then you better hit us up at hello@trade90x.com. What are you waiting for? Again, we're already into March, and before you know it, it'll be June, and then it'll be December. So not too late to make those changes. Now, again, on the weekends, whether it's also pre-market, weekend, post-market, it's always about you guys. It's always about understanding how to extract consistent income from the markets, and then how we here at Trade90X can help you guys build that skill to extract consistent income and give you that support. That's the key here every day. Again, our goal is to understand what is the overall, what's happening in the markets, and then how we do that. And then again, how we do that is, again, a little bit simpler. I like to keep life simple. Now, if you see this one page right here, I talk about it every day. If your plan is more than this one page, then you are definitely too complex. Like I said, your process should be simple, replicable, repeatable, that gives you the process and strategy to prove that you have a consistent edge. Now, we do that, something we created here at Trade90X called the Earn the Right to Trade Live, which includes extensive education, backtesting, support, and accountability. Now, I can only speak for myself in our community, but if you don't have that support and accountability, I promise you, most people are going to fail. I mean, there's a lot of great information out there, or things you can buy, but again, if it doesn't come with something that has extensive backtesting, replay, support, and accountability, it's not going to do 99% of the people any good. And I can speak, from experience. Whenever I've had that support and accountability, I can't tell you how much it's helped me accelerate my journey. Okay. So like I said, we come in every day. We have what we call routines. Again, we have pre-market, live market, post-market. Now, we're here in the East Coast, so our pre-markets are 7 to 8, live markets between 8 and 12 is our sweet spot, and then post-market is our journal and review process when we're done trading. Now, we're here on the weekend, so we do our weekends, and at the end of the month, we want to look at the end of the month reviews. And again, in this weekly thing, we're going to evaluate what we did over the week, and then look and see what, moving into Sunday, Monday, when the futures market or the market's open, what is our game plan, for the week? So again, here are the steps, and we're going to go through them. I'm doing this for over a year now, giving you guys all the goods. I don't hold anything back in these reviews, whether it's a weekend, pre-market, post-market. I give you everything. I give you our exact steps. I'm going to even give you our strategy, our #1 strategy, for free. I do it all the time. So now, what are the things that I want to know? Now, somebody who's been building companies and been around the markets, 20, 25 years, the one thing I will tell you, that if you don't understand your numbers, and again, I don't see enough people leading with this in other, strategies and things like that. If you don't know your numbers in business, you are not going to succeed. All right. There's no way you can scale a business if you do not know your numbers. Now, I can only speak for us here at Trade90X, of course, but when we talk about active trading, we're talking about, we do not risk more than 0.5% to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital in any one session. And we focus on, risk management, risk reward of minimum of 2 to 1 to target 1. And we have well-defined profit and loss of that 3 to 5% per session. Now, why do we do that? Why do I keep harping on these number things? Because, like I said, if you know your numbers, you're going to put the probability on your side. Now, I see way too many people on YouTube and things like that risking 5, 10, 15, 20%. And what that tells me is that they've not traded any real money for a period of time, because listen, losses and drawdowns are part of trading. I hate to be the bearer of bad news, but that's just part of a trading plan. And if your risk is not in line and you're risking 5, 10, 15, 20%, listen, I don't care how good of a trader you are, anybody could lose 5 trades in a row or more. And if you do the math and you're risking 5, 10, 15, 20%, well, you're down 25, 50, 75, you've blown out your account. And I promise you, if you blow out your account, most people are not coming back. That's why I'm such a stickler for process. And this is why I keep bringing it up. And hopefully you're listening to me and saying, you know what, this guy's got it, and I'm definitely going to listen, because if you do listen, then you're going to put the probability in your side. Okay. Now, if you want a fast fix and just, wheel and deal and gamble, be my guest. But for 99.9% of those people, it's going to end poorly. Now, once we know our numbers, what are the next important things? Now, I don't care if you trade penny stocks, futures, forex. I don't care if you're a scalper, day trader, swing trader, position trader. These questions are the questions that we ask every day, and these are the ones that we feel are most important. I don't need to know anything else. So basically, I want you to also understand what type of trading suits your personality, time, and resources. Do you have a job? Do you don't have a job? Do you want to trade part-time? Can you make fast decisions? Well, when you're part of the Earn the Right to Trade Live process, we'll figure that out with you, because number one, it's not one size fits all, I'm sorry to say. Now, also, you want to understand some quick data points. Now, I look at the same data points every day, which I'll show you in a minute or two. And again, these are the ones that we feel help give us an edge. And what is that edge I look for every day? Well, all I care about, no matter what type of trader you are, no matter what kind of asset classes, do you understand market context, the long-term main trend versus short-term? Okay. Do you understand who has control, bulls, bears, or range? Is it obvious who has control, bulls, bears, range, context? Say that quickly 20 times. And do you know what a bullish, bearish, range context looks like? Yes or no? Do you know what high probability A setups look like in a bullish, bearish, or range context? Yes or no? And do you know when to sit on hands and choppy no-edge price action, order flow, which happens over 50% of the time, by the way, and then understanding the odds enhancers that we use to help give us that edge every day. This is what you're going to learn in our Earn the Right to Trade Live process until you prove that you have back-tested and replayed to the point where you have a consistent edge, and then only have you earned the right to start trading live. If you don't have this skill set, then what's going to happen is you're going to go in, you're going to blow out your account, and you're going to be, oh, this sucks, and it doesn't work. Well, it does work for the people willing to put the time in and that are serious about this. Now, here are the symbols that we like to trade. Now, if you're a newer trader, I'll typically say you're going to start with 1, 2 at most until you can build up. Now, the reason we trade these symbols, for us, that's, I can only speak for us, these are the symbols that we feel have the most important on the market context overall. And we'll do this with options, futures, or stocks. And again, it comes down to what is right for you. Okay, it could be all 3, it could be 1 or 2. So we'll find that out in the Earn the Right to Trade Live process, because some of this will also be due to your funding restraints. All right, now monitors. Now, been there, done that. The reason I say 2 to 3, I see people have 4, 6, 8. Yeah, I mean, listen, it looks great, but I can promise you, the more that you have to look at, the lower the probability of having success. Now, I use 3 right now. I have 1 for my brokerage. I have 1 that I call the horse race view, where I have the 6 to 8 symbols that I look at every single day on one screen, and all I'm focused on is which one of those has the most obvious high probability setup within a bullish, bearish, or range market context for me to trade. And then my other screen is I have individual tabs for each one of those symbols, so I can quickly go to them. Again, you'll learn that in the Earn the Right to Trade Live process, how we set up our screens, because it's very important for efficiency. Now, before we start, make sure you discuss with a financial advisor, accountant about risk and capital. And I talk about this every day. Please have 6 to 12 months of emergency funds put away before you risk any capital, whether it's trading or anything else. Anything you didn't understand so far about our trade plan, hit us up at hello@trade90x.com. And when you do sign up, make sure you received your free Trade90X journal and checklist, and there'll be more stuff coming. And if you take advantage right now, go to our Trade90X Instagram page profile, and you can set up a free 15-minute call and ask anything about trading. All right. With that said, as my phrase I like to say, let's go get it and see what's happening going into Sunday and Monday. Again, we come in every day prepared. We use our routines and we rinse and repeat. And if you don't know what you're doing, make sure you ask questions. All right. So first thing I'm always doing is I'm going to go look at some data for next week. So again, as we come in, on the weekends, let me go. I have to use Forex Factory because Econo Day is not I don't know, for some reason it doesn't come out until the week. All right, so here we'll go to Forex Factory. I'm gonna go to calendar, and then I'm gonna use the filter tool. And I'm only interested in the US myself personally. If you have other time frames, then you will look at this. And I only want the most important news. I go to filter and also go to next week. And we'll see here that Monday, there's really nothing. Tuesday, Wednesday, Thursday, Friday, we got FOM, we got a lot, we got Powell, we got a lot of stuff going on here. Look at this. So starting Wednesday, Thursday, I mean, we're packed all next week. So next week's going to set the tone potentially for the month of February. All right. So when it comes to news and earnings, again, these are things that I call personality changers. Okay. All I care about is we do not trade news and earnings. All I care about is important news and earnings. Does price move quickly to an A setup within a bullish bearish range context? And if it does, we get our confirmation. We're willing to accept the risk, manage the trading journal. Are we clear? So again, just be aware right here of all the important news and when it comes out. Now, earnings. Here is again, and everything I show you, by the way, you'll see pop-ups here, so you know it's free. And again, everything I show you is free with this data. You don't need to pay for it. But again, when we look at stocks, again, what I'm looking at now, of course, if you have a stock here, pay attention. But what I'm looking for here during the week is, do we have stocks before the market, after market, that can be personality changers? And you can see immediately what stands out to me is you got Target right there, which we know is a big consumer stock. You got a big Chinese, you got Kroger, you got Costco coming. I mean, there's a lot of things here. Remember, we're 70% consumers, so just pay attention and understand that news and earnings, definitely when they're important, can have a personality change. That's why we do not trade it. All I care about is waiting patiently, patience for my A setups. Okay. And I'm not interested in just pushing buttons. There better be a good reason for you to push a button. All right, fear and greed index. Again, we are more bullish. Barchart.com, go to the stock tab, go to market momentum. And what I'm looking for here is what are all the stocks in the market based on the 50-day moving average. You can see over the last month, we're holding 50%, but we keep going back and forth. The momentum is not clear based on this. Okay, FinViz. Not only is it a great heat map, scanning, but I love their sector information. And the reason, again, I'm a visual person. I hope if you are too, then you'll love this. And what I'm looking for here is the 3-month, 1-month, weekly, and 1 day. And what I'm looking for is that confluence. Okay. Is it bullish? Is it bearish, or indecision? Bullish is going to be all green, bearish all red. And if it's red, green, red, green. Now, if I see that we're all green, well, then not only am I confident in my day trade or scalps, but I could potentially take a swing trade because I've got that wind in my back. Now, if I'm looking for shorts and these are all red, same thing. But I'm not interested in taking a trade more than a scalp or day trade if we have a lot of red, green, red, green. Well, it looks like we got a lot of green going. So bulls definitely have the edge. Now, next, going quickly. TradingStar.com. Remember I told you during the week, if you've been watching me, this company does a great job for free. This only comes out Friday, 3:30. So it's important that you look at this every weekend. And again, this makes up the most important symbols. Now I'm going to go right to the S&P, which represents 75%. And what I'm looking for here, and I don't know why this thing's been taking so long to load up I guess because of all these pop-ups, but what we're looking for here is this. I'm looking at the 85% that control the market, the banks, institution, hedge funds, not retail investors. Again, I don't care what people tell you on CNBC or YouTube. Again, I work off facts. Right here, this is fact. This is telling you what the 85% controls. And on the S&P, 83% of those people, the smart money, are bullish for 16%. So what this tells me is, remember, this comes out once a week, so it's not necessarily going to affect day to day, but again, what it's telling you is that the long-term bias is still bullish until proven otherwise. Okay, I don't need to tell just because someone says it on CNBC, unless they have the facts like this, it's nonsense. Okay, so just remember, bullish bias still in play for the long term. Next. One of my favorite tools, they're all favorite, but this one especially, why? Because not only does it have these predefined tools, the Dow, S&P, NASDAQ, FTSE 5000, NYA, Russell, gold, oil, Apple, and then I have the VIX, 10-year, and the dollar. Basically, these are symbols that I like to use, not only to trade, but to help me build my market context. And what I love about the stock charts is I can quickly look at that long-term for short-term, because remember what I told you, you need to master the long-term for short-term. I don't care if you're a scalper, day trader, swing position, know the long-term for short-term and know what it means. Now, these symbols right here, especially the Dow, S&P, NASDAQ, the NYA, the Russell, okay? These quickly tell me what is going on with the market. And then I use my odds enhancers, which happen to be the VIX, 10-year, and dollar. Now, just real quick, if the VIX, 10-year, and dollar, long-term or short-term, are moving up with clarity, that is bearish. If they're moving down in sync together, then that is bullish. Now, the VIX for me is the most important. It's the center of volatility, and you can see we're at the bottom of the curve, but we're sideways. So we're not sure yet. Now, if we look at the Dow, S&P, NASDAQ, FTSE 5000, NYA, and Russell, they're all moving lower left to upper right. So all I care about, do you know what bullish, bearish, or range context looks like? Bullish is lower left to upper right. Bearish is upper left to lower right. And in bearish momentum, whether it's a 1 minute or it's a monthly chart, in bullish or bearish momentum, we're looking for clear momentum legs that have those pullback and pauses. Those momentum legs into pullback and pauses are where we're going to be entering into bullish and bearish momentum when it's clear and we have an edge with numbers. In a range, whether it's a 1 minute or a monthly chart, equal highs, equal lows. Well, we box those equal highs and equal lows up. I want to stay away from the middle of the range 90% of the time. That's me. And I'm looking for the high probability setups in a range if the range is something that you trade in your trade plan. Bottom third, if it's obvious bullish rejection, I want to go long. Top third, obvious bearish rejection, I want to short. I play those, fade the edges of a range until it can break out to bullish, bearish momentum. And that's it. So right now, I hope you agree with me that we're moving lower left to upper right in the longer term in the symbols that matter. Check? Yes. Now, as active traders, we're going to go to the shorter term and we're going to look at the same and we're going to determine Dow, S&P, NASDAQ, FTSE, NYA, Russell, they're all moving lower left to upper right. And then what are we looking for? We're looking for the symbols, if we're bullish, momentum into pullback and pause, momentum into pullback and pause. And now we're running. So one thing I will not do is I will not chase. So the Dow hasn't broken out yet, but S&P has. So now what I do is I don't chase. I look for a pause or a pullback. Same thing right here with all these other ones right here. Now the Dow is interesting. We'll have to keep an eye on that. It hasn't broken out yet. All right. So now that you understand that the long term and short term, if you want, I also like to look at the sectors. So here you go. And again, this is also another confirmation. Again, I'm going to look at the S&P. It's lower left to upper right. And then say you like to trade ETFs or stocks in an ETF. And again, I have videos that are coming out called the Trade90X watch list edge. Watch list edge. This is something that you can do at the close. You can do it every weekend or the close of each day. And basically all I do is I focus on, you know, right here. What is the S&P telling me? We're bullish. So which one of those sectors is going to give me the best opportunities? Well, for me, not XLP, XLU, no. This one's giving the pullback, not bad. But again, you got XLY, you've got XLC, you've got XLK, you've got XLI, XLB. You know, again, you got some really nice right here. For me, it'd be XL right here, XLY, XLK, I, and B right there. And I would definitely be keeping an eye on the XLV. But right now, those are the ones that, for me, are the most bullish. So again, then you can either trade, if you don't trade the S&P, then you can trade the actual ETF, or you can go and look at symbols within there. But that's for another video. But this is another confirmation I like to use, especially on the weekend. And we definitely have some very bullish, you know, indices along with the S&P. All right, next. So on the weekends, what I like to do is this one is also the same thing I showed you right here. Stocks based on the 50-day moving average. I charted it. So what I did was I have the S&P, NASDAQ, Dow, I have the US dollar. Remember, if the VIX and dollar are moving down. That has bullish implications for the market. And then here, I took the 50-day moving average. Remember, I showed you how many stocks are above and below their 50. Now, remember, these are just odds enhancers. If you don't have setups in the chart, it doesn't matter. But let me show you how I use it. So this goes back 20 years, so it has some importance. So over the last 20 years, every time we've gotten into this, kind of high 70s, 90, it's been a time to pay attention, to go from bullish to bearish, a possible pullback. And every time over the last 20 years, we've had this very obvious rejection, time to potentially look from bearish to bullish. Now, how I use it is, say I'm short right here. This is where I would then possibly take my profit or lighten it up and then expect a pullback. Now, if I'm in a bullish trade up here, I could potentially look at it and say, okay, time to take some profit, lighten up, and look for a potential pullback. And that's all it is. And then what I have to the left here is that all the stocks based on the 200-day and the 20. So I can use the 20 with the 50 is a little bit faster. But what I really look for is when all three of them are at these extremes. All right. And then I can look at the chart. And again, remember, when I'm looking at a chart, all I care about is it bullish, bearish, or a range context. And if we can't figure it out, we're patient. Now, if you look at the S&P here, it's lower left to upper right. So what I'm looking for is, where are those momentum and pullback and pauses within the chart? That's all I'm looking for. And where I use this band is I want to see the price above it. So what I do is I use the line chart, and then I go right to the candle chart like that. Let me blow it up. And so what I do is I use the line chart, and then I match it up with the candles. Now, this one for me would not qualify because it's below the band. I want to see below. So right here. So this is how I use it right here. Okay, there we go. But I use the line chart because it allows me to see those pullbacks a lot clearer. All right, so we can see very clearly that was the last pullback on the S&P. For me, that was the right here is the NASDAQ. And here, and not quite yet. So we'll keep an eye on that area. But these are just areas, and this is a great odds enhancer once you learn how to use this. All right. Now, one other thing that I like to do on the weekend is just look at the bigger picture. So I've got the S&P against the VIX right here. And we can see that we're kind of in a range right now in the longer term. So we're kind of, remember, so if the S&P is bullish, remember the S&P is the lead. That means, again, if we're moving up, that tells you that the markets are bullish. If the S&P against the VIX is moving down, then it's bearish. It's telling us that we're kind of in a little bit indecision right now. I've got S&P against bonds. We've been moving lower left to upper right. I've got the S&P against the shorter term bonds. We're moving lower left to upper right. That's good. This is against the overseas right here. We are definitely still moving up. And these are important. This is growth against value. Now, growth is definitely more positive, I believe. And again, growth now is telling you. See, these are the type of things where I give you the facts. Like, again, when someone tells you, oh, you should be buying value or growth, well, this is telling you right here, you should be looking more at values, at growth stocks right here. Or you can just trade these ETFs. Again, if you want to simplify it. But again, this is a great way here. S&P against the dollar. We're moving lower left to upper right. Okay, that's a bullish sign. Right here, this is the SPY against the S&P against emerging markets. The S&P still winning out. And then this is another important one. Now, again, XLY, XLP. Now, remember, XLY, we're mostly a consumer nation. When this is bullish, this is good for bullish over markets. Remember, XLP is staples. So if we started seeing this moving lower, remember, XLY is the lead symbol. But you see that right here? This was bearish for markets. So when when we see staples leading, then that is bearish for markets. So this is something that I call this the economy kind of view. It tells me some key things And again, these are great odds enhancers to, again, I don't need to look and hear something from CMB or guys on YouTube. Learn the facts that I show you every day or every weekend. This gives you all the information you need to know, and you'll be ahead of the curve. All right. So now that we've identified also the long-term versus short-term here is more bullish, now we go to the charts. So then how do I look at the charts? So let me show you. I look at the main trend versus intermediary. Our main trend is going to be monthly and higher. Our intermediary trend will be, say, 10-minute to the weekly. So the way that we look at the world is, again, I do not care what you trade. I don't care what time frame you trade. Understand main trend versus the short-term trend. I don't care if you trade penny stocks, crypto, futures, forex. It does not matter to me. First thing I'm going to do is I'm going to look at the monthly chart. This could be crypto, penny stocks. I happen to do the S&P because it represents 75% of the market, and we trade it. So like I said, on the weekends, I get a little bit more granular. But all I care about, do you know what a bullish, bearish, or do you know what bullish, bearish, or range contact looks like? Do you know what the A setups look like in a bullish, bearish, or range context, whether it's a 1 minute or monthly? Well, bullish is lower left to upper right. Bearish is upper left to lower right. Ranges equal highs equal lows. So what are we doing right now? We are bullish. We're moving lower left to upper right. Would you agree? I hope you said yes. All right. So now remember what I talked about, whether it's a 1 minute or monthly, the setups are going to be clear momentum, lower left to upper right or upper left to lower right. We're looking for momentum into pullback and pause. I like to use line charts and then put on the candles. Okay. Now, this happens to be a monthly chart. So now you see these red lines? I call these monthly and weekly decision points. These decision points are created. I look for areas where price historically or most recently have paused and left the station quickly. If they do, I put a red line there, and I usually get these from the monthly and weekly. I don't want to trade into them, and I want to see how price reacts. So again, remember, this is a monthly chart. Your main trend is breaking out, but it is bullish. Now, when the main trend is bullish, most likely I'm then going to go look at my intermediary charts and see where I can find pullbacks to join that bigger trend. Now, if I trade the weekly chart, again, what am I looking for? Bullish, bearish, or range? Well, it's lower left to upper right. It's bullish. Then what am I looking for? I'm looking for those momentum into pullback and pauses. Then I put on the candles, and if I get clarity, now when I look for bullish trades, I'm looking for clear engulfing pin bars, double dojis that then lead into engulfing and pin bars. If I'm bearish, I am looking for that clear lower high, lower low. I'm looking for those rejections, especially if we've got the shooting star on top, engulfings or red double dojis that then lead into shooting star or engulfing candles. All right. And again, if you were trading this chart, these were your last two setups if the weekly is something that you trade. Now, if the daily chart is something that you trade, again, it's rinse and repeat. You ask the questions, are we bullish, bearish, or range, or no edge? You see I have my decision points in from the monthly and weekly, and here are the areas, okay? Now, one of the things that you can do is I can use the 10 moving average, or that band I showed you from the other chart. This is fine right here. And what I'm looking for is, do I have bullish setup candles? Where I have the arrows, do I have bullish setup candles that close above the 10-day moving average? If I don't, then I am not going to take the trades. Okay, that's it right here. So these would be the potential trades right here. These were your trades if you were trading a daily chart. And I used the line chart again so I can see where these pullbacks happen, and then I put on the candlesticks and see if it matches up. All right. So there I just showed you a good way to use your odds enhancer. Now, my fastest swing trades will come from my 30-minute and 1 hour. Now, the 30-minute and 1 hour chart is also going to be my anchor chart for my day and scalp charts. Okay. So again, we have the top-down approach, which I'm showing you. Monthly and above is the main trend. I'll use a 10-minute up to weekly for our intermediary trends, but for my fastest swing trades, again, I can use the weekly, daily, and anything down lower, then I like to use a 30 and 60. Now, when I get down to the 30 and 60, as I mentioned, this is going to be my anchor chart for our day and scalp charts. And then I'm going to show you our Trade90X Earn the Right to Trade Live, one short strategy that came from you guys asking me to give you a faster way to break down this overall process. And I did it, and I've been doing it for over the last year. And on the weekends, I do a bunch more symbols. Let's break it down. So here are the tools that I use on this chart. Okay, so number one, you see the yellow line? This is where the week starts. These levels that I'm about to show you are all predictive, not lagging. They can be used as entry, stop, and targets. And the best part about them, they're here when we come in. They're not after the fact. And they quickly tell us if we're bullish, bearish, or range. These levels are all free. And they give you an edge over 99% of the traders once you know how to use them. And any good process or strategy has to have several things. One, it should have a set of tools or technology that helps you, again, quickly tell you whether we're bullish, bearish, or range. Check, we have them. Step number two, you should have clear and precise bullish, bearish, and range setups. Check, we have that. Three, actual precise steps. Then you can back test and replay this to prove that you have an edge. And then, of course, I've given you our numbers. So those are the things that you need to prove that you have a process or strategy that works. And then it just takes repetition and time. And then the back testing and replay, when you're part of the Trade90X Earn the Right to Trade Live process, we review all of that. So now, check. Let's go to the tools. The yearly high low in black, the monthly high low in orange, the weekly high low in purple, and then to help us with our shorter term, we have the previous day's high in black. And then if sometimes what you'll see is the previous day's high low match up with those weekly, monthly, and yearlies. Okay, so the previous day's high in black, and then you see it matches up here with the weekly. So whenever we have a weekly, monthly, yearly match up with the previous day's high low or close to it, we just put a line right there, and we know that we have multiple levels right there. Now, so we also have the overnight open and this previous day's close line in dotted. So why are these levels so important? Well, number one, the previous day's range is going to quickly tell us if we're short-term bullish, bearish, or range. If we break out above or below, then I'm looking for those weekly, monthly, yearly as potential, whether they could be target, they can be entry targets or stops, but I'll put lines there as well, just to know that we're there. Now, remember, we'll also potentially have those decision points from the monthly and weekly, and I'll show you that in a second. First thing I want to do is I want to show you the tools right here. Now that you understand the tools, now let me show you the actual setups. So the setups, and then I'll show you the steps. Here are the setups. Let me just get to the setups right here. So anything above the previous day's range, if we've got that, again, higher high, higher low, momentum into pullback and pause, that's clear. Let me go down to a smaller time frame so you can see more structure. So anything above the previous day's range, and we have this going on, we have higher highs, higher low, momentum into pullback and pause, we are more bullish. And if we break above, we're looking for those continuation trades up to the next targets. And look at that, it hit that weekly, monthly, yearly target. No surprise, and rejected. Okay, now if we're below the previous day's range, and especially when we have a previous day's high low and we have another weekly, monthly, yearly right on top of it, well, we know that's going to be important levels. So if today we would have done this, clear, lower high, lower low, momentum into pullback and pause, then we would have had a bearish confirmation, and then we'd be looking for those momentum into pullback and pauses to get a continuation down to another key target. Are we clear? So now you know how we use the levels to determine bullish and bearish. Now, what happens if we are in the range? Well, The trades that we look for in a range are going to be, remember I talked about the range, bottom, middle, top. The middle is my least favorite to trade. My favorite areas of a range to trade that give us the highest probability are going to be top third, bottom third, fake out, breakouts. So look at what we had here. So we had right here, double top and an area to short. So this would have been overnight traders, because remember, we're coming in somewhere right around here. We're coming in between 7 and 8. So here, let's just put it right there. So the overnight traders had a top third trade. Bottom third is what it looked like this. We get either a double or triple bottom where we're looking to fade. And when remember, when we're in a range, got to understand the bias. It's telling us that it's a neutral day, that buyers and sellers agree on price. So what I want to look at is I want to look at the most obvious fade trades, top third, bottom third, fake out, breakouts. So if we get that, so bottom third, I'm looking back at 2 to 1, middle or top. Top third, I'm looking at 2 to 1, middle or bottom. And then, of course, I'm looking at a fake out, breakout. So if we would have gotten a fake out, breakout, it would have looked something like that. And I'm looking for the fade trade short. At the bottom, fake out, breakout, you wait for the turn, rejection to come back in, and that's it. So we play the range setups until it can prove back to this. That's it. That's your job every day. And if you don't have an ace setup, you do nothing. You sit on hands. Now, one other thing so you now know what bullish momentum is, bearish momentum, range, we're looking at top third, bottom third, fake out, breakouts. Now, one of the other thing that you need to understand is, what does no edge price action look like? Well, what I'm going to do is, you see this right here, when we have this sideways choppiness or just no edge, this is what we call no edge price action. Until I see more clarity, and what you're going to be doing in the Earn the Right to Trade Live processes, you're going to be looking at thousands of charts, and you're going to be practicing, number one, okay, looking at the levels. Do I have bullish, bearish momentum? Do I have range context? Do I have range setups? If not, do I have no edge price action? And you're literally going to be going through thousands of charts and learning this stuff until it becomes second nature. And again, this is why we have the Earn the Right to Trade Live process. So it builds that repetition and discipline. It shows you that your process and strategy has built an edge. Now, again, when you have something that becomes second nature, you come in with confidence. When you have a set of rules, you know each day to come in, we're going to be doing our pre-market between 7 and 8. 8 o'clock to 12 o'clock is our sweet spot that we like to trade. When we're done trading, you know that you're going to be journaling and reviewing. When you come in pre-market, you're going to be coming in, setting up. Do we have bullish, bearish momentum? Do we have ranges? Okay, if we do, then what are the setups we're looking for? And then we're going to wait patiently until they set up. And then when we get those confirmations, whether it's bullish, bearish momentum, or a range setup, we're willing to accept the risk, manage the trade, and journal. And again, as long as it fits our risk parameters, we're good to go. So right now, like I said, overnight traders on the S&P got paid. And then when we came into the US session right about here, we went into consolidation, we rejected, and then the trades that matched up for us, these are the trades for me that matched up right here. And this one, of course, being the best setup. Why? Because you went from an inside range to an outside day, bullish momentum, and you had a beautiful multiple rejection right here. And this is why I like using anywhere from a 1 to 10 minute to find my bullish, bearish swing trades or my range setups. Now, again, if you're a day or scalper and it is above or below the range, we're going to be looking for our minimum 2 to 1 trades with being flat at the end of the day. Okay, so, and again, on Fridays, as I mentioned, every Friday, I'm only looking for day or scalp trades. Why? Because I don't like going into the weekends with new positions. I usually like doing those earlier in the week. All right, so now let me go through the actual steps. Let me take all this off. So step number one, and it's going to be the same for our Trade90X Earn the Right to Trade Live, one chart view, and you can look at any symbol. Now, because this is the weekend, I'm going to do about 10 symbols. I'm going to mix it up with asset classes so you can see that you can literally come in every day, always check the news and earnings, of course, and then you're going to be able to go right to the chart and go through your steps. So step number one, you go to the weekly. What am I doing in step number one? Are we bullish, bearish, or range? I want to see what that bigger, main trend is. Well, it's bullish. It's moving lower left to upper right. Then what I'm going to do is I'm going to put in red line where has price most recently paused and left quickly? Well, for me, right here and here. We call these monthly, weekly decision points. Step number two, I like to use anywhere from a 30 to 60 minute. I've been using the 30-minute of late so I could see a little more structure. My job in step number two is using the tools and squeezing the chart. Are we bullish, bearish, and range? Well, lower left to upper right is bullish. We have been bullish. Now we see that we've got these decision points. Now, remember what I talked about? I'm going to use the shorter term, previous day's high, low, midpoint, open, and previous day's close to determine, are we bullish, bearish, or range? Well, we can see, just looking at that, we were bullish. Now, what we're going to do is then what I'm going to do is I'm going to go down to step number three, my 3-minute. Now, I like to use a 3-minute. You can use 1 to 10 minute. And if you want to use Renko, range, tick charts, be my guest. But again, if you don't have a strategy that has a set of tools that are predictive, not lagging, that tell you we're bullish, bearish, or range, precise bullish, bearish, or range setups, you're going to be lost. And then, of course, you have to have the steps and the risk and money management things, which we give you. I give you this every day, every weekend. This is $1 million stuff. I hope you're loving it. Now, remember, we're coming in around 7:30. Our sweet spot is, again, we do our pre-market right between usually around 7 to 8. And then again, we like to trade between 8 and 12. But remember, we do not trade into news and earnings. So we're always checking when news and earnings are coming out. Okay, check. So when we came in yesterday, again, going through the steps, step number one, weekly, we're looking for the main trend and those decision points. Step number two, in the 30-minute, I'm looking to see what price has been doing over the last few weeks or months. And then are we above? Are we bullish, bearish, or a range? Now, for swing trades, I'm only interested if we're above and below. And again, looking at it, breaking down, the overnight traders had again, on here, we had a top third, beautiful trade, short right here. Now, you could have shorted right here as well, because that's a top third trade right there. Target is going to, what would have been 2 to 1 or middle. Now, remember, in trading, not everything works out. We work off of, again, this is why in our backtest replay, when you've had hundreds of trades that have proven to have an edge, we know over a body of work that we understand what bullish and bearish momentum high probability setups are. We know what range high probability setups, and we fully understand that losses and drawdowns are part of trading. And we also understand that not every trade works, but we know that we have an edge, so we believe in our strategy. So for me, again, because you're a seasoned now, Trade90X earn the right to trade live process, mastermind, or you're somebody that watches our videos now, you knew that right here, the reason I didn't want to trade right here is because we were so close to here. So what I was looking for was a rejection or a break and retest, and that's what we got. So if you understood patience, here were the 3 opportunities, with this one being absolutely your A setup. And besides 2 to 1, this weekly, month, or yearly was a main target that just, hey, I don't make it up. It hit it right there. So that was ES. Those were the setups. And again, remember, these levels are here before we get in. All this stuff is determined. This is not after the fact. This stuff is all here. It's then for you, again, to master what is bullish momentum, bearish momentum, range, context, what are the setups, know your numbers, understand the times that we like to trade. And then once you understand the confirmations, accept the risk, manage the trade. And then once we're done, you journal and review. And in that journal and review process, you're going to be asking this another set of questions. What did I do well? What did I need to work on? Did I follow my strategy? Did I follow my numbers? What was my confidence level? How did I manage the trade? Okay, these are the things that you're going to ask in your journal process every single day, and you're going to snapshot it. And what we like to do is, I have a file, and this is, we teach this. You have a file by year, by month, and then within that month, you have the symbol, And then what you're going to do is you're literally going to snapshot, write notes on the chart. You're going to date it, and you're going to write things like, what kind of day was it? Was it a bullish momentum day? Was it a bearish momentum day? Was it a range day? Was it a multi-trend day, meaning that it was a range or bullish, or went from bullish to range? And these are the things that when you go and look back, then you can quickly look, like, again, if I'm looking for bullish momentum days, or I'm looking for bearish momentum, I'm looking for range days, I'm looking for multi-trend days, or I'm looking for no edge days, then you can go back quickly into your files and journal, and this is how you learn quickly. Are we clear? Good. All right. With that said, now that you understand our strategy, you understand the tools, you understand the setups, you understand the steps, you understand the numbers. I just told you the journal process. You understand the times that we like to trade. Let's go look at some of these symbols. Okay, here's NASDAQ. Let me go break it down. Step number one. All right, so we're going to do a bunch of symbols here. So this is, like I said, on the weekends, by the time I'm done, you should already have questions and understand this. So are we bullish, bearish, and range? We're moving lower left to upper right. Where are the areas where price has paused recently? There we go. I only want the most obvious ones right here. Step number two, 30 or 60 minute. What has price been telling us? And you can see we've been moving lower left, upper right. We were range bound right here. Okay. We were range bound. And now we broke out. So what I like to do then is I'll use the ray lines at the start of the week for the short-term levels, our weekly, monthly levels. So I keep them separate from the decision points from the monthly and weekly. And again, whenever we have levels that are on top of the previous day's high and low, I'll put a line there, and we know when we have multiple levels, like especially up here, we know they're important. This is why price bounced. All right, so we come in, are we bullish, bearish, or range? Well, when we come in, we see that we're looking at it right now, we're bullish. So then what I'll do is I'll go down to my 1 to 10 minute, whatever you like to use. Okay, remember, I'm always going to put my vertical line right about 7:30, 8 o'clock, just so we know. And then also what I will do is when we have news, okay, I will put another line where news is. So when I'm doing my pre-market, I don't have to go back, so again, that's something that is critical. So when we came in yesterday, this is what we saw. So the buyers tried, but then failed. Okay. Now, I usually like those nice break and retests. I'm not usually a breakout trader. I would have liked to have seen this, and we didn't get it. So, hey, not every trade's going to work, but right here, the buyers failed. We came back in, but then look what happened here. And also, always use your horizontal or 45-degree trend lines. 1, 2, 3. So you had a trend line right here that also, told you that there was more buying pressure. Now, because you understand our process, bullish, bearish momentum, using a set of tools that we've discussed now, right here that this was the best setup. These were the best two setups, and this was the best setup right here. And why was that the best setup? Because when we came in, I don't want to trade I don't want to be bullish in the top third, or if I'm in the bottom third, trade bullish. We're too close to the previous day's high low. So then we waited for either so right here with the trend line, this is what we would have been waiting for. If we were going to short, we would have gotten below this trend line, and then I would have been looking to short. Or we got this, you got from an inside day back to an outside day, momentum break and retest, beautiful pin bar right there. There was your setup candle. If you missed that one, then this was your second setup right here. So you had two beautiful setups with space up to this key level, that weekly, monthly, yearly. And again, depending on your trade plan, if you take off a 2-to-1 or you're looking for that bigger target, that's something you'll decide in your trade plan when you're part of the right to trade live process. But beautiful setup right there on NASDAQ, and it closed the day bullish. Okay, let's go look at the Dow. Again, rinse and repeat. Take all this off, Again, this is how you become a master trader. Rinse and repeat. Look at the charts, do your replay, do your back test. This will all become second nature. All right, so bigger picture. What is the Dow? Bullish, bearish range, lower left to upper right. Check. Where has price paused most recently? We're going to make those in red, and it's had a pause candle there. So these are two areas I'm going to look at. Go back to the 30-minute and step number 2. We have our decision points in. And then what we're going to look at are what's price been telling us? Well, it's kind of been more range bound this last week. And where it was mostly an inside day, and we had these bullish right here. We had these areas right here. I'm going to put right here, previous day's low, high, midpoint. These are, again, where the weekly and yearly, monthly decision points. And if we would have broke out here, we had a weekly and then we had a monthly, yearly right there. All right. So now that we have that, we have our levels, and we kind of have step number 2. Let's go to step number 3 so we see a little more structure. I'm going to put my vertical line in right around that 8 o'clock area, in that area. So when we come in, okay, we have the previous day's high, low. We know that. We have these other weekly, monthly, yearly levels above and below that. So if we broke it, but what did price tell us? Well, when we came in, we can see that there was a lot of no edge, and then we finally broke down right here. And then coming in, we had this no edge kind of price, and then we had this beautiful drop. And again, remember, this was a monthly. Here's your previous day's high. This was the setup right here, the bottom third. You had multiple rejection in the bottom third of the previous day's range. We had a range day. What are range trades? Bottom third, top third, fake out breakouts. This was a beautiful setup if you're trading YM. And then the target, again, is going to be 2 to 1. And then we broke the middle. And then your next target would have been the top until we see what happens. And then look what price did. It kind of just was sideways. So really the only A setup today and yesterday, was this one. So when you go into your journal process, if you're somebody that traded the YM, these are the things you're going to break down. All right. So that's the YM. Let's go look at the Russell. Same thing. Let's take it off. Go to the weekly. Okay. Let's go right here. Step number 1, the weekly. What is it telling us? Well, I hope you see what I see is that for the last 2 years, the Russell has been in a range. Okay. Remember, I'm going to take those where the equal highs, equal kind of bottoms are. And so again, remember, this is a weekly chart. This is for position trading. So until we break out with bullish momentum or bearish momentum, we play the top third, bottom third. I stay away from the middle. And look at how many setups you had: top third, bottom third, fake out breakouts. Now we're starting to, have some strength here. So we're either going to reject and short, or we're going to have a break and retest and we're going to go long, or a fake out breakout. So again, not enough information in this chart, but again, you see how we break it down? All right, so now we go to the intermediary trend, 30 and 60 minute. All right, so what do we have here? So I'm going to move that right there because there's a monthly and yearly right there. And that's where you have a previous day's high, weekly, monthly, yearly level. You think that's important? I would say so. Here's your previous day's low. And then, of course, you've got this, and I'll start it at the beginning of the week. You've got that weekly. So where are we? We're basically inside day right here. Okay, inside day. So then I'll go to my 1 to 3 minute or whatever chart you like to trade up to 10. And I'm going to put my vertical line in at 8 o'clock. All right, so what did we see yesterday when we came in? Well, we see the overnight traders were in the middle. We had this no edge, and then price came down to the bottom third at the monthly. And if the overnight traders told us they traded either here or here, that was a very nice setup with a target to the middle and to the top. And Again, if you're somebody that's seasoned, then I don't have a problem. If you trade, like I said, open is for people that have had, 6 months to a year, proven consistency with the Trade90X earn the right to trade strategy. If you're a newer trader, we're not trading into the open. We're waiting. We're not trading into the open. We're never trading into news, and we're waiting for We're waiting for the open or the news to settle. Now, where were the setups here? So this was kind of the middle. So the Russell to me didn't really have those A setups I was looking for. And then once it got to the top third, no edge, choppy price action. So for me, the overnight got paid, but really not really the A setups I'm looking for. There were better setups. So if I'm looking at 6 or 8 symbols, the Russell is not the one that I would have traded. All right. Let's go look at the other asset classes. This is what we do on the weekend. So let's go look at oil. Okay, weekly, same thing, rinse and repeat. It does not matter. What am I looking for in step number 1? Are we bullish, bearish, or a range? And not that easy to tell right here, but what we are looking at is the areas where kind of a range almost. These were the areas where price kind of last paused and dropped. So we're in a range, bottom third, looks like the buyers are pushing off that bottom third. All right, so we know that there's a range in the bigger picture. All right, let's go to the intermediary. Maybe we'll see something in the short term. Okay, using our tools. We know where those bigger, top third, bottom, the bottom third is from the bigger picture. Now, let's go put in our levels where we're above and below. Well, we have this weekly where it started. We've got this yearly and monthly right there. Here's your previous day's high low, and the previous day's low is right here where there's a monthly. So I'm going to put these 2 blue lines right here. And we know that the previous day's range low is important, but now we see we're above. So we then go to the 1 to 3 minute. And when we came in, remember, it's right about it, Now oil opens at 9 o'clock, so we'll look right there. All right. Excuse me, I'm definitely stuffed up this morning. All right, so again, I hope you guys are getting the value like I am. I mean, I love going through this stuff. Why? Because it helps me prepare every single day, every weekend, and it also shows me new things that I might have missed before to give me an edge. So here, let's go look and see. So when we came in, overnight traders got paid. Why? You had a monthly, weekly, yearly, along with the previous day's range low, rejection. So beautiful trade for overnight traders to go long, and they hit the middle and the top targets. And so now when we came in, we broke out. So this was the trade right here after the open. So what we had here had a nice trap low right here, rejection. Had a trap low rejection at a previous day's high. So we came all the way around, rejected. That was a beautiful trade right there. And once we broke out, we went to the target right up at there, that yearly and monthly. So that was your setup. These were the setups right here. These were what I call VA setups. And again, why? Because remember, once we're above the previous day's range, we're bullish. And it proven otherwise. Now, if we would have done this, the fake out breakout with strong rejection, then we are back into a range and we're looking for the fade trade. All right. But that's not what we got. And we got the rejection or close to it right at that previous day's high. All right. That's oil. Let's go look at bonds. Hold on a second. I'm going to take some water. All right. So now bonds. I don't care what you trade. It doesn't matter to me. It could be penny stocks. It could be bonds. So step number 1 in the weekly right here, bonds. Let me take these off. All right. So we can see, hopefully you can see, that bonds have been moving upper left to lower right. We've been more bearish. It's tried to bounce, and these are the areas where price paused most recently and left the station. All right, so we put our decision points in, and then we go to our 30 and 60 minute, and we use our tools to determine what's happening. Are we above or below or inside the range? Well, we started inside the range and ended up outside the range. Okay, now let's go look at these levels that are outside the previous day's range. The weekly, monthly, yearly, here is the previous day's range right there. And he had a monthly inside the previous day's range. All right, now that we see that, let's go down to our 1 to 10 minutes so we have a little bit more structure that can help us with whether we're, bullish swing, bearish swing, or range trades. All right, so here we go. So we're coming in right around here. Overnight traders had a top third rejection trade. Beautiful short, they got paid. And then coming into, now bonds open at 820. So coming into the US, look at that, beautiful. Multiple rejection right here, off the monthly. There was your bottom third trade right here, because this is the weekly, previous day's range low. And there we go, we have that monthly. So beautiful trade right there. And then again, this was more of an afternoon trade, but it definitely fits. Because again, once we went from an inside day to an outside day, what are we looking for? We're either looking for the continuation or we're looking for that retest back, and we got it. So very nice trades. So overnight traders got the short. US traders early got that. Remember, all you need is one good trade. Remember, if you have one good trade and you hit your target, you're done for the day. You don't need to be over trading. Too many people over trade, and that's where they get in trouble. All right, so now let's go look at, let me go look at gold. Same thing, rinse and repeat. Let me take all this junk off. So I hope that you see what I see right here, that gold has been literally in a range for the last 2.5 years. We boxed the top third, bottom third, and top third. We want to stay away from the middle. And look at all the setups if you were trading gold on a weekly time frame. This is for your longer term traders. Top third rejections, bottom third, and fake out breakout rejections. Now we're moving into the top third. I don't want to trade the middle. So we go to the 30 minute. Let's use our tools. Do we see anything that could have gotten us a shorter term trade? So what are we looking for? Well, we can see that gold had been sort of range bound and then finally broke out. And again, look what it did. It went from an inside day to an outside bullish day. Let me put in where those other key levels are. So we have the yearly, we had the monthly above, we had a weekly near the previous day's range low, and then if we would have broken lower, we had this down here. All right, let's go to our 1 to 3 minutes so we see the structure. Now, remember, gold opens up at 820. All right. All right, so what happened when we came in? So we're coming in right about here. We see that the buyers come in. Now, for me, this happened off the middle, so I don't like to look at the middle. And then we get the fake, kind of a rejection. So it looks like we were going to get the fake out breakout, but we didn't. So the fake out breakout would have done this. We would have gotten the rejection then short, but no. What happened was the buyers said, and then we got that move, and there was your setup right there. Your setup was right there. Beautiful. There was your setup right there. I'm going to go below these candles. So when we use a structured stop, long or short, I want to be below the most recent candles at a key level. Check 2 to 1 or up to another key levels. This trade actually gave us 3 to 1. Beautiful setup. Ken, just understanding using our tools, the power. Are we bullish momentum, bearish momentum, or a range? Puts you ahead of 99% of the traders. Then if there's no edge like this, we box that area until we do have an edge. All right. All right, I'm going to do a few more, because I promised you on the weekends we would do all these different asset classes. So let me do a currency. We like to trade it. Where is it? Euro or Japanese yen. So let me go through the steps. So weekly. There we go. All right. So I hope you guys are getting that value that I get. Like I said, for me, this is what gives you an edge. You know exactly your game plan. You know the rules of engagement. You know your strategy. You know every day your routines. You know how to come in and build your plan. You know what to do when in the live market. You know what to do in the post market. I mean, this is what is going to give you the edge, and the repetition and discipline is going to put you ahead of 99% of the traders. Well, we know the euro's been it's been more bearish. The bulls have tried, but now we've been range bound now for a year. All right. And you need to know that, the long term versus short term. So now we use our tools. We know there's a top third, bottom third, but using our tools, is there a shorter term trade? So again, previous day's high low, where are we? Above, below, inside. We're in a range day. Let me just mark off these other key levels. And we have a previous day's low, weekly, monthly. So you know these levels are important. Let's go down to our 1 or 3 minute. Again, currencies open at 820. There we go. All right, so when we came in, what was happening? So for me, we're in the bottom third. You had this choppy no edge price action, and there were your two setups right there. Those were your two setups. Why? Because you have previous day's range low, along with the weekly and monthly, and then look at the two rejection candles. Okay, so if you were an overnight trader, no problem. Now, if we came in right here, and then we got that rejection coming in to our sweet spot between 8 and 12, there was your A setup right there. Again, there is no other. If you were trading between 8 or 8:20 and 12 o'clock, and the euro was something you trade, for me, there is no other A setup. That is your A setup right there. All right. And this is what you need to learn. You'll learn that during the right to trade process. The more you backtest a replay, the more that you understand what bullish, bearish, momentum setups looks like, and what the range looks like, and using our tools, our setups, our numbers, this is going to put you in a big edge. All right, so now that we've done the indices, we've done gold, we've done euro. Let me go do Bitcoin, and then I'm going to do 1 or 2 stocks, and then we're going to get back to our weekend and enjoy it. And this is what we do. Okay, we do our routines, and then we go back to enjoying our life, and we block out our time that we trade. We hit it, we make our money, we go to the journal process, and then we go on with our day, whether we have hobbies, other businesses, and that's what trading should be. It shouldn't be sitting here 8 hours a day. It's about 3 to 4 hours tops, and blocking out that window, having the right mindset, and extracting that income, and then moving on with your day. All right, so Bitcoin, look left, we see the bigger picture. This is where price paused historically. Here is where price paused most recently. We're moving lower left, upper right, but we're a little bit parabolic, so that concerns me. Anytime we start getting a little parabolic, expect potential pull. But here's the thing. Remember, markets can stay irrational more than you can stay solvent, so just be aware that this could go to the moon. But like I said, we're just playing the odds. So right now, I have my decision points in. We know we're bullish. Step number 2, let's go to the 30-minute. We're going to see in the 30-minute what price has been doing over the last few months. Well, we know it's bullish. All right, what's it doing short term? What did it do this week? Super bullish, and then ended the week in a range. Well, we have these decision points. Now, coming in, remember, this is the beauty of our process. These levels that we use are all predictive, not lagging. They're already here when we come in. Okay, there is no guessing. All right, so we have previous day's range high, and right here, here was your previous day's range low with a monthly. So there's your high, low, and then we also, right here. All right. So coming in, we knew that these were important levels. So let's go down to, now remember, Bitcoin is actually live right now, which is great. So let's see what we're doing. We're doing real analysis here. So in live. So right now, this was Friday, yesterday. So what did we see yesterday? So yesterday, overnight traders got paid. And in the US session, if you're somebody that traded right here, this was the open that was still in the bottom third. Here was a key level. You had, look at this. Anytime you have 2 to 3 rejections, especially 3 at a horizontal or 45-degree level, that's a high probability potential we're going to reverse. And there you go. So these were beautiful setups yesterday. Okay. Now, looking at right now, so we're coming in right now. Here's your previous day's high. Here is your previous day low right here. This is it right here. And you've got multiple levels. So we have the blue lines right here. So we're talking about right now as where this is real. So we're sitting in the middle of the range. We know it's a range day. Look at this. This is choppy, no edge price action. So right now, if I'm trading Bitcoin today, I'm somebody who trades on the weekend. What am I looking for? I can tell what I'm looking for. Top third, obvious bearish price action to fade. Bottom third, bullish price action, obvious to fade. Momentum, fake out, breakout. I want these obvious. I'm not interested in chop. I want to see big, strong momentum moves with either rejection, continuation, or fake out, breakout. So here, fake out, breakout. And I play the range setups until price can do this. Move above the range, back to bullish momentum, higher high, higher low. Momentum into pullback is where we're going to look for those entries up to the next target. Below, I'm looking for this, okay? So that's Bitcoin right now. All right, let me just do 1 or 2 stocks, and then we're going to call it. So right now, Mara, which has been a Bitcoin stock, and just full disclosure, I do hold it. This has been a real winner. It basically trades with Bitcoin. So, and it's a miner. So again, the steps are the same. Step number 1, what has it been doing? Well, it's been bullish, but now look at what happened here. This has been kind of parabolic. Meaning we're kind of double topping, but what I'm doing is I'm looking left. Where has price paused historically? Here and here. So these 2 levels are already here. Now I'm looking at where has price paused right here recently. And I'm also going to put this one in right here. All right. So there is a good chance right now, just looking at this chart, there's a good chance we could come all the way back down, or who knows. All right. So now let's go look at the 30-minute. See our shorter term. All right, I'm going to put that right where the previous day's high. I'm going to match that up with the yearly. All right, so right now we're looking at the 30-minute on Friday. Were we above or below? It was a range day on Friday. And look at this. You had multiple levels matched up with the previous day's range low. So we know that they're important. Let's go down to the smaller chart. And let's see what Mara provided us on Friday. So again, remember, when we come in, these levels are already here. This is the beauty of our Trade90X Earn the Right to Trade Live one chart view using our tools. These tools are predictive, not lagging. They're here before we come in. They tell us whether we have bullish momentum, bearish momentum, or range. You can tell I'm excited about this stuff. Why? Because it's going to give you an edge. And this told you right here. Look what happened. We had a fake out breakout. So if you were trading this, it gave you the setup right here. The trade, and then it gave you another one. So here you go. It gave you number 1. It gave you the fake out breakout right here. The sellers couldn't hold. Why? Because we had strong level right here. You had a weekly and monthly right here. So here was your trade right here. And then you got a second chance right here, a retest of that previous day's range low. And where were the targets? Of course, 2 to 1. And then, of course, here, any one of these levels here. And we hit those two levels right here. We hit target 1, 2, not 3, but definitely, nice, high probability setups, just being patient. All right, let me do, here you go. All right, so this is the semiconductor. This is an ETF. I happen to love this one because it's the semiconductors, and it's something that I like to trade. So again, you're going to go to step number 1. No different. No shortcuts. Step number 1, what are we trying to accomplish? What is the main trend? It's moving lower left to upper right. Look left first. Were there any areas where price most recently and historically paused? I'm going to put those two, and I'm going to put these right here. All right, so right now we're going parabolic. So again, we'll either get a rejection or continuation. And of course, if we do break above, then we'll start looking at that area. Okay, now let's go down to the shorter time frame, and using our tools, when we came in, we had our tools in, and then once it broke above, it told you it was a bullish momentum day. So let's go down 2 minutes. Now this is stock, so again, we don't have any overnight. Now what you can do is a little trick. You can go to extended trading, and you can actually see what's happening in the before the market opens up at 9:30 to tell you, do you have bullish bearish momentum? And that's something you'll learn. All right, so all right, in our earn the right to trade live process. So basically right here, here's your previous day's high, low, midpoint, previous day's close. Here is your open, and then we had our bigger targets up here, and then this is a key level right here. This is kind of your monthly along with the open, and then if we happen to break below, this would have been the weekly. But this told you, okay, this is why I love our tools. They don't lie. These were here before we got in. As soon as price broke and retested, it told you had bullish momentum, and then we had a monthly with open as a key level, and then you had the retest. There was a beautiful trade. Remember, when something gaps up, it's green. It's a bullish candle. If it gaps down, it's a red candle. So that you had a bullish momentum candle, and then it gave you multiple rejections. And then literally, not only did this go 2-to-1, but again, this went all the way to target. All right. And then once we had put in, you had a absolute, once we broke above here, you had a trend line also to help you guide. And then once you broke trend and then hit target, time to get out. But these were the trades right here. And then we broke this little swing high, and then you had the retest. So you had two beautiful trades. And again, this is why I said I only like to trade a few symbols over and over. And again, because they're right in my view, and I'll do a video on that on the horse race thing where I have my 6 or 8 symbols, and literally I have them right in front of me. So I have 3 screens again. I'll have my brokerage, I'll have my horse race view, and then I'll have each tab on the screen above on the symbol, so I can quickly go to that symbol. They're all in front of me. Again, if something's not in front of you, you're going to miss it. Okay, so you got to have it right in front of you, and then I look to see which one has the A set up. All right, so let's go finish up and let's go back to enjoying the weekend. So what did we do here? We looked at the news, we looked at earnings, fear and greed index, again, telling us bullish. Again, momentum is still above 50% based on the 50-day moving average, but has not been kind of breaking out. Sector information is all green. Long-term, green. Okay, remember the symbols that we look again, understanding bullish, bearish, or range momentum. They're long-term, short-term. They're bullish. They're moving lower left, upper right. Next, the chart. Main trend versus short-term is going to be your monthly and above. It's bullish. Looking at the weekly chart, we're moving lower left to upper right on the S&P daily. Lower left, upper right. Remember, bullish or bearish momentum. We look for those pullback and pauses that are clear. Okay, I use a line chart. Then once I see the pullback or pause, I then go and put my candlestick on to see if I have those candles I'm looking for. Okay, and again, it's about patience. Can you literally stay patient and wait for those A setups. And then I showed you using our Trade90X, earn the right to trade live, 3-step, the tools the bullish bearish range setups and then the 3 setups starting with the S&P. Again, step number 1, we look at what is the main trend. Is it bullish, bearish, or range? Lower left upright, it's bullish. Then I look at decision points from the monthly and weekly viewpoint. Where has price either historically or most recently paused and left the station? I put these red lines. Step number 2, 30 or 60 minute, looking at the intermediary trend over the last weeks and months. It's bullish, lower left upper right. Then I zoom in using my tools. Are we above the previous day's range for bullish momentum, below it for bearish momentum, or inside the range? Well, we went from an inside range to bullish momentum. Step number 3, I like to use anywhere from a 1 to 10 minute to help me with structure. And then again, this smaller time frame will help us tell us clearly the bullish momentum, bearish momentum, or range setup, so we can use for either bullish momentum or bearish momentum swing trades, or our scalp or day trades. We know what bullish, bearish momentum setups, we know what range setups are. And again, the ES went from overnight traders had shorts, and then we broke back out from an inside to an outside day and gave us buyers on Friday multiple trades. Okay, so then coming in on Sunday, we know we have more of a bullish bias, and then we'll come in Monday morning and we'll do it all over again between 7 and 8. So if there's anything you didn't understand about the trade plan, about the data points, about the tools we use, the setups, the actual steps, the actual numbers that we use, then hit us up at hello@trade90x.com. I'm here to help you extract consistent income. We do this every day, every weekend, everything. It should be coming second nature. And if it's not, take advantage of it while it's available to ask questions. All right, let's go back. Let's go enjoy the rest of the weekend. I don't know about you. It's rainy here, so we'll enjoy the rest of the weekend, and I'll be back with you Monday morning to do it all over.